Perfect. Sweet. We should be good to go. Let me make sure I'm off mute. All right, good. So today we're gonna chat about present. Okay. So today we're gonna talk about researching dividend stocks. I wanted to just revisit this kind of presentation. I did one a few months ago, but I know we have a lot of new people. But I want to kind of just talk about this subject because I know there's a full chat where I spend all the time. Most of my time in the Wealth Squad is just answering questions and teaching in the Dividend Discord chat channel. But so I wanted to take the time to just do a lesson over researching dividend stocks because it's great to always have that knowledge, even if it's just a foundational knowledge over researching stocks. It's great to have. So if you don't know who I am, my Twitter social media is Decade Investor. My real name's Colin, but you probably have seen me around as Decade Investor. That's why I'm on Twitter, Instagram, and YouTube, trying to build a presence there. But that's who is talking right now. So I always like to talk about this at the beginning. Anytime talking about dividend stocks, is companies are not required to pay dividends. Just because a company pays a dividend doesn't mean they have to continue to pay a dividend. Just because a company, doesn't pay a dividend doesn't mean that they won't ever pay a dividend. Just basically, a dividend is never required at all. Quite a bit of companies pay them, but again, it's not required. I like to see, and I always tell people I talk to and that I teach, is see dividends as a cherry on the top of your investment, because investing solely for a dividend sounds great. You could get that high yield, but it could bite you in the tail. And I'll kind of explain that more. So always see dividends as a cherry on the top. You're investing in the underlying company. And if they pay you a dividend, if they pay you a great dividend, then awesome. But see it as a cherry on the top. And then the final thing is to always do your own research when you're buying stocks, when you're researching, it is always important to research. You never want to not research and then step into something you don't know. And then that's, not good at all. So just a few housekeeping things there. The biggest thing we can take away from this slide is just companies are not required to pay dividend. So, when you're investing in dividend stocks, do some companies have a better track record than others? Yes, but even those companies, they're not required to pay dividend. If you've been investing for the last 2 or 3 years, just within the last year in 2020, a lot of, quite a bit of companies cut their dividend. They were paying them and they stopped paying them because they didn't have any money. So that was a good real-time example, recent example of why companies, showing you companies are not required to pay dividends. See it as a cherry on the top. So there are two types of dividend stocks, really. The main two I'm going to focus on is a dividend income stock and a dividend growth stock. So a dividend income stock is a stock that's usually, not offering a great growth. The actual stock price itself isn't growing at a above average pace. Might be consistent. It might not really grow at all, but it offers a solid, consistent dividend. So if you look at companies like Exxon, Chevron, Altria, Johnson & Johnson Waste Management, are some great examples of, these stocks. They pay a higher yield. They don't grow at an above average rate, but their dividend at least has been consistent, historically. And then you have dividend growth stocks, which is the other side. And these stocks are the opposite. So basically, they don't offer a great yield. The dividend isn't great right now, but it offers a solid above average growth. So the share price itself, or the stock price itself, is growing at an above average rate, but the dividend currently isn't great. So if you look at like Microsoft, it's usually more tech companies, but not always, but usually more tech companies like Microsoft, MasterCard, Visa, Apple, stocks that are still in a massive companies in a growth stage, possibly, but their dividend isn't great. For example, Apple's is below 1%, which isn't a great yield, but as you hold on that long term, it can really add to a lot. But those are your two really types of dividend stocks: dividend income stocks and dividend growth stocks. So these are 4 things that I really like to look at when investing, into a stock that pays a dividend. these aren't the only four things that, you could look at. These are just four basic, um, you know, first things I like to look at for a company. I like to look at the historical growth and the future growth of the company, meaning the share price itself. And then I like to look at historical growth and future growth of the dividend, as well as the payout ratio of that dividend and current standing of the company. Like I said, you're not investing only for the dividend. You're investing in the underlying company. You see the dividend as a cherry on the top, but that is a part of your investment. So it's good to look at those things, as an example, the historical growth and the future growth of that dividend. So these are four things I like to look at. Again, not the only four things that you can look at or should look at, but four things that I'm going to cover in today's presentation. So throughout this presentation, I'm going to use Johnson & Johnson as our example. Not investing advice. I'm just using this as an example so we can have real data. Just a background on Johnson & Johnson. Johnson & Johnson is an American multinational corporation founded in the 1800s that develops medical devices, pharmaceuticals, and consumer packaged goods. It's a boring company, which usually means it could have a potential great dividend because it is a boring company. You can look on the bottom of the screen, all the products that Johnson & Johnson, not all of them, but quite a bit, some products that Johnson & Johnson has that we use on a daily basis, whether that be Tylenol, Band-Aids, Motrin. I mean, just a handful of things. And this is very minimal compared to everything Johnson & Johnson does. But an all-around great company, but a boring company, which is good. So I'm going to run through that little four checklist I had at the beginning. So this is the historical growth and future growth of Johnson & Johnson, the stock price itself. We can see in the last 5 years, it's grown about 40%, a little over 40%. So that brings us at about 8% a year. A little over 8% per year, which is the market average. That's why it's not really a dividend growth stock, because it's not growing at an above average rate, but it's consistent, historically been a consistent 8% growth share price per year. Again, that does not predict that the future will be at 8%, but it is historically, 8%, which is solid. When it comes to future growth, this is something that we all wish we could know. We all wish we could know what, in this case, Johnson & Johnson could do in the future, but we don't know. And we have to do, our best guess. And the best way we do our best guess is by researching it. We read articles, we see what analysts think, that spend their entire day talking about stocks. We see what, we read up on what the management says of their, potential things they're working on for the future, what the company's talking about, the overall, social sentiment of that company. Is it being used every single day? Stuff like that. You have to do your own research. A simple Google search, Johnson & Johnson future growth. And there's going to be a bunch of different articles that come up with different analysts saying what their thoughts are. Don't just read one, read a bunch, 4 or 5, and find what the average is talking about. And then also you can look at their financials to see where they sit numbers wise, what their revenue is, what their operating income. Just the entire, you could look at the financials. But if you want to do more fundamental investing, you would do more of the top and just seeing what management's looking for, who's running the company, what's their potential in the future for success, for the company itself, which would in turn hopefully increase that share price, and then in turn the dividend would hopefully increase. So you're getting double whammy that way. But finding future growth is tough because there's not, again, it's the future. We don't know. No one knows what any stock's going to go up or down in the future, over the long term. So that's where it comes in, where we have to learn for ourselves. We have to go in and do the research ourselves, do our own due diligence to see, is this share price, is this stock price, is this company going to increase in the future, as well as the dividend. So moving on to now historical growth and future growth of the dividend. This is a screenshot I took earlier today of since 2016, the dividend payout of Johnson & Johnson. We can see it's increased, every year. Now it's not like 2016, 2017, they're off by a month, but 80 cents, 84 cents, 90, 95, 101. So we can see, you know, Johnson & Johnson's dividend itself has increased every single year. And Johnson & Johnson's actually a dividend king. I mentioned this on the right side. It's a dividend king, which means that the company has increased its dividend for 50 plus consecutive years, which is insane. Not a lot of companies, less than 100 companies ever have achieved this status. So again, doesn't mean that it will increase for the next 50 plus years, but it's had a good run historically looking back. So we can use this information to kind of predict the future growth of the dividend, what we think it's going to be. You can also read articles about what analysts think. They'll run numbers and predict what the future growth of the dividend will be. But once again, no one knows. So you have to do your own research. And if you believe in the company, you believe in the stock, then it might be a buy for you. But looking at the historical growth can kind of help us predict or think on what the future growth could be of the dividend. Also, I'll take questions at the end. So if you have any questions, stick around because I will answer them at the end. I want to make that clear. So now we're moving to payout ratio, which is, how much of their earnings per share are they paying out in dividends? So this is Johnson & Johnson's payout ratio, hovering around, 40 to 50%. These are three different numbers based on a few different estimates and earnings. There's really no break of what you should look for. Obviously the higher the payout ratio, the more aware you need to be, the more research, because that means they're paying a lot of their earnings per share out to dividends, meaning, why aren't they, one, are they running low on cash, or they're not earning as much, or two, are they trying to keep up with increasing their dividend, but then they're losing out, money that they could be using to grow the company itself. So something good to look at, the payout ratio. Johnson & Johnson's at a solid, 40, 50%. That's really good. The higher, the more aware you need to be. The easiest way to think about this is if a firm earns $1 a share, their EPS is $1, and it pays out 50 cents over a year, the payout ratio is 50%. So kind of similar to what, Johnson & Johnson's is. It's about 52% and the trailing 12. Now this is, not $1. This is millions and billions of dollars. And then, millions and billions of dividends. But that's an easy way to think of it. Now, I want to make this clear because REITs, which is real estate investment trust. So you're looking at realty income. A lot of people talk about that one. REITs are a special case because by law, I forgot the letter A, but by law, they're required to pay out at least 90% of their earnings in form of a dividend. So if you're researching a REIT and you look at their payout ratio, it's going to be above 90%, maybe even over 100%. So keep that in mind if you're researching REITs, that their payout ratios are going to look way higher than like a Johnson & Johnson or a Coca-Cola or something like that. So REITs are a special case because of the law that requires them to pay out at least 90% of their earnings. And then when it comes to, the current standing of the company, in this case, we're looking at Johnson & Johnson. You can find a bunch of information by doing, Google searches. Google searching, what's, looking at their share price. Google searching, what like example search would be like what's going on with Johnson & Johnson, right? Or just reading articles like Johnson & Johnson news, reading articles about the company currently. What does it look like currently? Just this research, these 3 bullet points I just put up and researched earlier today, just to kind of get a brief information. Came out with the vaccine that was huge for the company. They had the news about the vaccines going bad, a couple of them. So that would hurt the share price possibly. But that's current standing, right? Working with the vaccine. Number 2 is an article I read about last week was they're focusing on technology and healthcare in the future. So could explain, some of their money is going to R&D, research and development for this type of technology they want to have in healthcare. And then, social sentiment, thinking about it just fundamentally, Johnson Johnson, what I showed you on the first couple slides was all the products, not all of them, but quite a bit of products that they have. They have everyday household products that we all use. So when you go to the store, how much of the shelf is Johnson and Johnson when you go into the pharmaceutical aisle, right? And which means that at least they're working on this research and development with technology in healthcare, but they're lights on products. Lights on, my old company that I work for use it, but lights on meaning like what keeps the lights on, what's like their beef is these everyday products that we use, right? Everyone's going in there buying Tylenol, Motrin, lotion, stuff like that Johnson Johnson makes. Yeah, they're probably not making a lot of margin, but it's keeping the lights on, it's paying the bills. So that's your kind of current standing. It's just more of like a think about it. How does it look? Starbucks, for example, if we're doing Starbucks, you can read some articles about Starbucks all you want, but you go and you drive past the Starbucks, everyone and their mom's in line at Starbucks. Doesn't matter if it's 9 a.m. or 10 at night, right? It seems like Starbucks is always busy. So just kind of thinking about it, where is this stock or this company stand currently, and just thinking about it through your head that way, because that'll help you make a decision on whether you want to invest, and then moving forward with the dividend, looking at that stuff. But closing up here, make sure to always do your own research. You never want to just blindly buy into something, and then it could burn you. I personally, like I said, I have a YouTube channel that I'm actually posting a video tomorrow covering 3 monthly dividend stocks, but I'll post that in the Discord tomorrow. But I have some videos that cover my favorite dividend stocks, plus me talking about them. So I don't just sit here and say buy XYZ. I actually explain the future growth that in my opinion of stock XYZ or whatever it is. So I'll send my channel link in the chat, but I'm posting there every couple of days, wanting to give out this knowledge and my thoughts on different stocks. So make sure to always do your research, whether that be reading things about the company, watching YouTube videos, asking around, doing your own research by driving by. If it's a physical company, you can go see. But always do your own research, because you don't want to follow blindly, because you can get burnt. So that'll cover the 20 minutes here of the presentation. I'm going to take questions. Excuse me. I'll post the link in the chat to watch some of those videos. But if you're headed off here, you don't have any questions, thanks for joining in. I appreciate you. I'm always around in the Discord, Decade Investor. Send me an @ I'll get the notification. I'll answer your question. Always here to help. But thank you again for being here. I'll stay on and take some questions. Just raise your hand in the chat, and I'll call on you. That way we don't have everyone shouting out at once. Or send your question in the Discord, or excuse me, in the Zoom chat, and I'll answer it that way as well. But again, thanks for being here, and we hope to see you around the Discord.